It was more expensive. Hey, happy Wednesday to everybody here. Jim Malone coming to you live on Dallas Trading Floor. Well, it looks like the stock market is weak. We were doing good. We're kind of moving. We're moving up in February in February, but it does look like we've hit a little bit of a patch here. It does look like it's kind of getting weak. And it is what it is. I was able to make some quick cash today on a gap up. It was really short. It was called First Solar. You might have heard of it. But let's get into the slides here, and yeah. So let's take a look. First of all, the Spider. This is the S&P 500 ETF that covers the S&P, which means that basically it's very broad based and kind of gives us an idea of kind of what's going on in the market in general. So this is the index that I really will look at to see kind of what the strength or the weakness is in the market. It pulled below 400 today, and that is a key. That's key. So if you can see right here, we pulled below 400. We're still above the 200-day moving average, but it is weakening, and it does look like, unfortunately, we are probably going to be moving lower. So that's kind of been the story here. We did get some selling off here, and it's a little bit above the average. So that does mean that we're going to be seeing probably some weakness in the market. And to get ready for that, of course, I do have some suggestions. But I want to show you my current holdings first, just so you can get an idea kind of where I'm at. We did have a kind of a rally in the XLE today. That's the Energy Select Spider, which covers the energy sector. It was up, thank goodness. It's been pulling back forever, but it was up with a little bit more volume. It kind of has hit an inflection point, and I do think it's probably going to go higher. XLE is the symbol, of course, on it. The price change, it was up about $1.65. Let's kind of just jump on over to the XLE real quick and get a look at get a look at it so we can kind of see it here. We did come down. We've been sort of touching that 200-day line, and it does look like we're finally starting to get some love here. Remember, this is the Energy Select Spider, and it's again, it's mostly Exxon and Chevron. But it is a way to play the whole energy sector without having to pick anything. So that's one of the reasons I typically like to use it. Got a pretty weak checklist, so I wouldn't recommend it for necessarily forever position, but it is there. Now I did start shorting on Monday. I started shorting a stock that of course everybody's familiar with, Domino's Pizza. It's been pretty weak, unfortunately. I shorted it, and it looks like it may be going up. The symbol on this one, DPZ. I do have a stop loss on this one. So hopefully it will, hopefully we'll get some love here, and it will move lower. But basically today it was up 301.15. It on earnings it just took a dive. And I think it is setting up for a short. I'm going to just hold out a little bit, probably move my stop loss up a little bit, maybe to 305, maybe to 307, and see if we can do anything there. But it did, this was earnings. Earnings came in, and it was kind of disappointing for a lot of the people. We're definitely below that 200-day line. That's when earnings came in. As you can see, all those red bars. Well, that's the institutions saying goodbye. So they're selling off there. So hopefully, that sell-off continues and we can make some money on this one. Very small short position here, only about 20 shares. So not anything that's earth-shattering here. But if we look at it, this is a weak stock. It's below the 200-day line. And yeah, we'll see what happens here. Just kind of want to jump on over to the earnings situation. The earnings situation here, and as you can see, it was up on the sales on the earnings, but only up 4%. So not very much for them. 4% up on the on their profits per share. We do still have a lot of we do have an increasing number of funds that are in it. It does, it's relatively reasonable. PE ratio 23 in this one. Cash flow is strong at about $15.13 a share. So pretty good on this one. But when it took this header on earnings, that's when I said, it's time for me to get in there and hopefully short it and see what's going to go on. Right now we're in a market trend that is under pressure. So it's neither feast nor famine. It's neither a great shorting market or a great long market. It's kind of a sideways market, and these are tough to trade just because they're just there's not a lot of room there for everybody. There's not a lot of room there. Want to show you a little video that I made today. This is regarding an interesting stock. There is one area of the market, though, that has been outperforming, and believe it or not, that is the bulk shippers in the oil sector, and we're starting to see some interesting movement there. Now, I own Serpico Tankers, which is one of the top-rated firms, but I was looking around today, and I was like, well, what other tanker companies have this very strong relative strength? And I found a really interesting one. It's called Nordic American Tankers. I've never heard of it, but looking at it, it just kind of made sense. So I did, haven't entered the trade yet, but real interesting. Let me just jump on over here to the video that I made for it and take a look at this.
Hello everybody, Jim Malone here from Dallas Trading Floor. I came across a very interesting stock today doing my screening, and you might be interested in it. It's a very, very cheap stock. It's under $5. It's called Nordic American Tankers, and right now, in this environment that we're in, tankers seem to be doing very well. If we look at the chart, you can see it's coming up off this base, and currently it's right below $5 at $4.46. The interesting here is the amount of volume that's starting to come in to this issue. If we draw a line across there, you can see we're starting to come to potentially a higher high here. So it's very interesting and definitely something that you should look at. What attracted me to this issue is the projection for profit this year. They're saying it's going to be up significantly. It's right here it says 999%, but there definitely is a lot of demand in the shipping area. Nordic American has a composite rating of 98, which puts it in very good company. Ardmore, which is the top-rated shipping company currently, is at 99. So definitely this is one that is looking very good. It's in the top 2% of stocks. This, of course, is not a recommendation to buy or sell any security, but I wanted to bring this one to your attention because it is moving very nicely, and it is a relatively inexpensive stock. The composite rating actually is 99, so something to definitely take a look at. The company has 25 double-hulled tankers and is building new vessels at this time. What's interesting is right now, after a many-year lag, the bulk transport of oil has become a very big deal, and many of the tanker lines are benefiting from it. Nordic American is relatively small float, but it does have a significant number of shares out there. 208 million shares out there, and the float's about 206. This is Jim Malone from Dallas Trading Floor. I'm live every day at 5 o'clock Central Time on YouTube. Hope to see you then.
Well, this is a chart here of Nordic American. Kind of wanted to show you how it closed today, right after I did the video. It did down, basically closed 443. Part of the reason we saw such a huge increase in terms of the projections this year is really, this stock had been making in the pennies. So That's the reason for the very outsized number, almost 1,000% of potential increase in profit. It was a relatively small issue that hadn't been paying out a lot, but it does look like they had excellent earnings. It just came through earnings, and they're up significantly. So something you might want to take a look at. I don't own it currently. I own Serpico Tankers, which is essentially a competitor. But it is it. Here's one kind of caveat here. We're a little bit far above that 21-day moving average we're 19% above the 21-day moving average. So it is theoretically extended, but if we look at the chart, sometimes the pattern rec is a little bit off. But if we look at the chart, there's a cup, and then it did 394. Of course, is the sort of that's the buy point. So it's a little bit extended. So maybe, I don't know, I'd like to see if it pull back a little bit and possibly buy it. But definitely a very nice reaction to earnings, and something that an area of the market that might be of interest to a lot of you, because I do think that the transport of oil just looks like that's going to be a big thing. Also, another thing I want to point out here, and it just this is kind of a special deal I have with Gavin McMaster, and this is a really great thing because Gavin McMaster is probably one of the best option traders, probably in the world. I mean, well, that's always debatable, but he has a course, and this is a great course. I've taken this course before. It's fabulous. If you want to really learn how to profit from options, one of the great things about options, we're kind of in a market where we can't really depend on the strength of the market, so we kind of have to do things. We have to do things a different way. And one of the ways we can do this, of course, is through options. And I want to put it out there for everyone. We have a special on this. Normally, it's about a $400 course. It's half off, and it's going to start at the end of the month, end of March. So I'm going to be, promoting this, of course, until the end of the month. But right now, you can go to this email address, https://stanstore, Stan, STAN.STOR/ Dallas Trading Floor, and you'll be able to see more about this if you're interested. And I think it's a really, really good course, and I've taken it, and I learned a ton. But Gavin McMaster, and I should be having more on this later, but hey, it's kind of a cool thing out there. All right, a question from what do you think about Apple? This is a question coming from TikTok. Let's take a look at Apple. Apple took a dive today. AAPL, of course, is the symbol for Apple. Let's jump on over to take a look at that Apple chart to see, kind of what's going on here. And let's put it up there. AAPL, of course, is the symbol for Apple. There we go, Apple. Here's the problem that I'm having with Apple, and let's get this into the frame for everybody on TikTok. Here's the problem I'm having with Apple right now. It is in a situation where it has fallen below that very, very critical 200-day moving average. That's this black line here. Here's the problem. The relative strength of Apple, 42. So that means that 58% of the market is doing better than Apple. So that's not good. It's also not good for the Qs, by the way, if you're trading the QQQ, which is the NASDAQ 100. Apple is a major component of that. You want to be careful because this is showing a lot of weakness in the market. And it's just, it's been pulling back. So let's look at that 5-minute chart for Apple. Just a kind of a bad day all the way around, just kind of straight down. And currently, we're trading below 145.50. So not the greatest thing in the world if you're looking to buy Apple. I wouldn't buy it here. We're still in a downward trend. I don't think it's bottomed by a long shot. I think that we could come down easily to 124 right down here. We could easily come down to that to that number right here. So very, very, again, it's not a good time, I don't think, to be an Apple. Also, if you look at the checklist on this one, it is not looking good at 56. I don't like to see anything less than about 67%, and 56% just doesn't cut the mustard, especially with a stock like Apple. Here's the thing. I think here's kind of my narrative on Apple and many of the other big cap tech stocks. There are a lot of funds that are trapped in these stocks. They're absolutely trapped in the stocks, and they need to get out of them. So the question is, how do they do it? Well, when the stock rallies, that's where they sell. So you got to be careful with stocks like Apple. I'm going to jump over to the weekly chart here to kind of show you what I'm talking about in terms of that. We have this concept called overhead supply, and what that is that basically 18 months prior to today is the line of overhead supply. And basically what that is that anybody that bought prior to where it is today, you see, they're very, very likely to sell. What I'm doing here is I'm drawing a line that intersects with the overhead supply line. You'll notice how many people purchased Apple above this 145.25 number. So here's the problem right now. If Apple is going down, why? Because there's resistance here. People that bought it here, it comes back up and they want to sell it. So there's a lot of resistance in Apple right now. It's a tough stock to trade. I would not be buying it here. It just not acting correctly. This, of course, is the overhead supply line, and then the line across here, 145.25. That's kind of where it's trading now. Here's the problem. If it goes below this line, I definitely think it's going to. We're going to see a lot of people that had it up here. They're going to probably panic and start selling, and that's definitely what we're seeing. So right now, I think you just got to be super careful regarding Apple. I just think it's just a really tough stock to trade right now, and something that you want to be very, very careful trading. All right, Jeff, thank you very much. What do you think of BABA as a buy? Okay, well, let's take a look at BABA. Of course, Alibaba is one of the largest China stocks out there. And interestingly enough, I did day trade First Solar today, and that, of course, is a sort of a China stock here. So let's take a look at the chart for BABA and see. Here's the problem I'm having with BABA. Of course, it's below that 200-day line. I just don't like to buy anything below that line. The reason is because that tells me that capital is flowing out of the issue. It did come through earnings. The earnings were very good for BABA, but the sales were down. See, this is the problem. Their profits were up per share, but their sales were down. So this is a problem that I'm seeing with BABA in general. I don't think it's a good buy here. I don't think it's bottomed. I think it's possibly going lower. I think that BABA could easily move down to the $85 range and then maybe even lower. 58 is the floor, looking like the floor for me. All right, let's take a look at the weekly chart to kind of test that theory. This is where I see the potential of it going. I think we possibly will see a floor, but it may be 65 before we get there. As you can see, it's changed direction. We were coming down here. We did get a bounce up, but now we're went down once again. So I can't recommend BABA at this time. I just can't recommend it. It does look like the trend has not been broken. It looks like the trend is moving lower. So be careful with BABA, and I think it's going to be tough. All right, let's take a look at AMD, because a lot of people are asking about AMD. Of course, this is in the chip space, and AMD is a fabless company, meaning that they design their chips, but they don't manufacture them. That is left up to companies such as TSM, Taiwan Semiconductor Manufacturing, or some of the other ones, like Global Foundries. That's another one that does the actual production work. So AMD is one of the largest of the non-foundry companies. Very significant, of course, as a company. Now it has been on an upward trend, which is good. I'm much more bullish on the chip stocks than I am on a lot of the other stocks in the market. Big cap tech, especially the companies like Apple, companies like that, I'm a little bit leery on. I'm better on the chip companies, but in particular, my bias right now is to the smaller chip companies. The smaller chip companies. Unfortunately, that's not the case with AMD. AMD is one of the larger chip companies, so I'm not quite as bullish on this issue as well. I want to show you, it was up a little bit after hours. I want to do a comparison on this one with a company that I've been tracking and I want to basically get into, and that's Impinj. It's a smaller chip company. Symbol on that one is PI. And I want to kind of take a look since the first of the year, see if I'm right about this. Because, sometimes my facts are not correct. But what I'm doing here is I'm kind of comparing. Interesting. Oh, they ended up exactly the same. Isn't that interesting? Very interesting. So let's take a look at the comparison between Impinj and AMD. And let's see if we can, see. And I also want to take a look at another one. I am bullish in the chip space, but I'm just not as bullish with AMD. Now, here is the comparison chart between both of them since the first of the year. If we started with basically $1 at the first of the year, we'd be up on both of them, believe it or not, almost 20 cents. So that's pretty good. I want to put in another chip company that has been doing real well called Rambus, RMBS, and see how that compares. Yeah, Rambus is a little bit better than both AMD or Impinj. And let's look at another one, LSCC. That is Lattice Semiconductor. And let's see how that one's done. Okay, so that's the best of the bunch. So if we're looking at chip stocks right now, and I do really think that, even though the market has been pulling back, I still think that many of the funds are going to be investing in chip stocks. So as of the first of the year, we kind of have AMD down here. It's up about 20%, which is excellent. But LSCC, Lattice Semiconductor, it's up almost a little over 30% since the first of the year. So that's very, very good performance. And that's the one I think that instead of looking at AMD, you might want to look at Lattice. Let me pull the chart up here for Lattice so that we can get a good look on it. The symbol on this one, LSCC, and let's look at Lattice. See if there's an entry here. I don't know if there is or not. I was trading this one. I'm not currently in it, but I do like the stock an awful lot. This is Lattice Semiconductor, and this is the daily chart here. It does look like we're pulling back, and we want to buy this. Again, this is sort of a tactical thing. Lattice Semiconductor right now has a 100% checklist. So this is one of the best here. On the technicals, we're less than 5% away from the 21-day line. This is a great place to buy a stock like this. Also, if we look at the pattern recognition here, it's a cup with handle, which is one of the best, the best base formations. Now, there is an issue here. It's 12% above the correct buy point. So we really only have a secondary buy point that we can go on here. Basically, what happens is it came up and then it kind of topped out here, and then it pulled back to the 21-day line. But I do think that we can buy it. Lattice Semiconductor, LSCC, the relative strength is a 96, so that means it's in the top 4% currently of stocks that are trading. So looking very good in terms of that. If we look at the fundamentals on it, they came through some excellent earnings. Their earnings were up significantly. They were up 24% in terms of sales, and their earnings per share up 53%. Part of the reason Lattice is very, very good here is because Lattice is in sort of a sweet spot in chips, and this is what they call programmable logic chips. There is a lot of demand for this, especially in the automotive sector. So they tend to be very, very good here. Strong cash flow, and the PE ratio is a little bit high. Price to earnings ratio is a 48. I'd like to see that lower, but that's just that just really shows how much the stock has run up. Currently, it's trading at about 86 in the after-hours trading, and I definitely think that it could move higher here. So that's one of the ones that I wanted to point out. That's the one I kind of wanted to point out to everybody here. But LSCC is the symbol for this chip stock, Lattice Semiconductor, LSCC. So definitely one that you might want to take a look at. If you're looking for something to move into. All right, so let's get to some more questions. Thank you for holding on here. Jeff, okay, great. IND, no, IND, is that IND1? Did I get that right? Mr. G, IND1. Let me just check a gander at that one. IND I think that's it, maybe. Is that right? No. IND. Let's see if I get anything there. No, I don't. IND1, maybe? No. INDL, maybe? No. Oh, yeah. Okay. Oh, okay. Very, very good. Very good. Okay, so this is the okay, so this is interesting. Exchange traded fund secret performance India index. Interesting. So this is an India fund. I have not traded this one. I will be honest with you. I have not traded this one. Interesting fund. So this is basically giving us a chance to take advantage of some of the. I do think that some of the foreign funds are going to be doing very well this year, and that's based, of course, on on a lot of things. But this is the India fund. I'm not that familiar with it. And but I'm sure that probably has a lot of the stocks like Reliance Group in it. I'm not sure exactly, and maybe Mahindra and some of the other companies that are large Indian companies. Don't like the action on this one though. It is a downward trend. We have a relative strength of 15. So I just right now, even though I do like a lot of the foreign issues right now, I just couldn't recommend the India fund right now. I just can't recommend it. It's just not doing all that well. All right, Go Videos. DKS is near. Earnings is near. Your thoughts? Okay, this is Dick's Sporting Goods for everyone out there. DKS, and DKS has been strong because one of the things about retail, when you're looking at retail stocks, one of the ways to analyze them is how many stores they have and are they expanding or not. That seems to be a key metric when it comes to some of the retail chains. So it's very interesting. This right now, they've got basically earnings in, I think it's about, it's 6 days. We've got earnings in 6 days. Let's kind of look and see how it was last time and see if we can see. So the last earnings was in October. That was the October quarter. So this is going to be the January. This is going to be the quarter ending in January for them. And of course, it's a fiscal year, not a calendar year for them. Last quarter, sales were up about 8%, but the price was down. You know what? I don't like this trend, and I'll tell you, this is one of the things I'm looking for right now is trend, and I'm looking at the estimates for 2003, and they're showing a negative trend here. It looks like sales are coming off a little bit, so I don't expect that this is going to be a very good quarter. Now, the question is, do you want to short it before earnings? I wouldn't do that, just because earnings can be such a strange beast here. Here's the thing about Dick's. I think it's going to move lower. That's based on the trend that I have. Their earnings per share has been moving south, unfortunately, for the last 3 quarters. So I don't think that this is going to be any change. It does not look like they're going to turn it around here. So I would be a seller of Dick's into earnings. I would not hold it through earnings, and I would look to see what's going to happen. But I would probably be a seller here. I definitely would not be a buyer on Dick's Sporting Goods. Just wouldn't be a buyer on it. All right, let's see. Noah Garza 07. Thank you very much. In from TikTok. Looking at UMC. Okay, let's look at UMC. And UMC. There we go. United Market. This is an ADR. This is essentially like TSM, Taiwan Semiconductor Manufacturing, but it's also Taiwan-based company that manufactures chips. So it's similar to Taiwan Semiconductor Manufacturing, a little bit smaller company, not quite as widely held by some of the funds, but very significant in that it does manufacture chips. Now, here's the issue. Of course, there are some political risks with fabs that are based in Taiwan because of China, unfortunately. I wish I didn't have to say that, but there are. But other than that, it's looking pretty strong. The relative strength is at 83. That means that it's in the top 17%. So that's looking very good. In terms of can we buy it or not, well, the checklist is acceptable at 67%. And on the technicals, we are right at the 21-day line. We're 2% above it. So that indeed is a good sign. Here's what I want to do. I want to compare this one, these two Taiwan-based semiconductor companies. I want to compare them, Taiwan Semi with UMC, United Micro. So let's do that real quick and see if I can get a. So it's giving me a little bit of a hiccup here. Let's see if I can get back. There we go. Okay, let's try that again. Let's see if we can make that work. I've got a little bit of an issue here. This is a very inexpensive stock because it is an ADR, American Depository Receipt. And the way that works, of course, is that the shares actually are held in trust, and then they're traded in New York as a block. So interestingly enough, this is this is how a lot of foreign stocks are traded. It actually trades on the Taipei Exchange, and but is available in New York as a ADR, American Depository Receipt. So let's see if I can do that comparison chart again. I had to relaunch my charts. A little bit of an issue there. All right, so let's go over here to United Micro again. And then let's also compare it to TSM. There we go. All right. So this is, it actually is outperforming TSM. So this is interesting to me. The difference in price, of course, is significant between TSM and United Micro, but this will give you kind of a idea essentially of the comparison between Taiwan Semiconductor Manufacturing, which is the largest one, and UMC, which is a smaller one. Actually, it has done a little bit better than TSM. TSM is down here. If you had invested $1 in TSM stock at the beginning of the year, you'd be up 20%. That's pretty good. And you'd be up almost 27% on UMC. So UMC is definitely looking very strong, which is interesting. It's looking strong, and so I can't really say anything negative about it. It does look as if we are seeing, again, we're seeing a lot of strength in the semis, mostly in the fabless, but also we're seeing it in the fab operations as well. It does look like it's come down. It's bounced off the 21-day line. Not a ideal place to buy it. Checklist is 67%, which is good. It's close to the 21-day line. I think you could take a flyer on this one. I wouldn't go in with a full position, though. I would be very careful on this one, possibly a half position on this one. And what I mean by that is that if you take your portfolio, let's say it's worth $8,000, you divide it by 8, kind of like pizza. One of those slices, about 12.5%, is one full position. So I wouldn't go in with a full position here, only with a half position, or about 6.25% of your overall value of your portfolio. So that's as far as I'd go there. Oh, I'm sorry. Thank you, INDL. I'm sorry. Pardon my. Let's look at INDL. I misspoke here because I couldn't quite get it on the screen. I didn't get it right. Let's look at this one. This is a semiconductor stock, INDL. And let's take a look. Okay. Is that right? INDL. It's INDI. All right. Let's see if I can. There we go. ND Semiconductor. Pardon. Sorry about that. There we go. Okay. So now we're up with that. Boy, this is looking good. It's a after hours $10.65. It moved above $10. I definitely like that. That means that that enables some of the funds to come in. Let's see how close to that cup with handle base it is. 22%. The pivot's really low. Wow, this is interesting. Okay, well, I like this. Let's look at the technicals. A little bit extended at 12%. So that is a little bit of an issue, but it's close to the 10-day line. Here's the thing. I would suspect that we're probably going to get a pullback. Let's take a look at the 5-minute chart to see. Yeah, we got a pullback right at the end of the day there, but it does look like there's a floor here, and that's at about 10:45. So you could probably go in. As you can see, this is definitely sort of a floor here. So I think you could go in probably with a bid at about 10:45 on this one. It is looking real good. Again, I do like this stock. Unfortunately, the overall market is pulling back, and that's what I don't like. But I like this stock. I think it looks very good. I want to take a look at the earnings, kind of to see, kind of to see what's going on there. Boy, look at that. Their sales are up 74%. They're still losing money though, so it's a growth stock. They're still losing money. So the question is, are they going to be able to? They did lose money, but it looks like their earnings are. It looks like their sales are increasing and their earnings are starting to. Their losses are starting to decrease. So this one, interestingly enough, could be a breakout. It's a 94, so it's definitely in good company with stocks like Rambus and Lattice Semiconductor and Mobileye. This also is an excellent stock, Mobileye. Even though it's a startup, semi-startup. So yeah, definitely interesting. Here's the thing about this, a little bit more speculative. Of course, I'm looking here at the weekly chart, but it does look like $10 is a major ceiling for it. So it looks like if it's moved past that and it could hold above that, it looks like it may hold on here. Here's the thing, I'd be a little bit careful about this because we did come up very quickly from about $8.25. We came up very quickly, and the question now is, it's a little bit extended. I probably wouldn't buy it here. I would probably wait for a pullback, because if you follow the reversal line here, you can see it's fairly extended above there. So I definitely think it's probably going to pull back a little bit, but then if we get a pullback, possibly closer to that 21-day line. Let's go back to the daily chart here to show you the 21-day line. Closer to that 21-day line, see, we're 12% above that 21-day line. If we get closer to that 21-day line, that's where I would buy it. But I definitely would watch this one. Excellent stock, but I wouldn't buy it in this position. It's just a little too extended for me right now, but excellent. Thank you, Charles. Let's see. And Charles is looking for HLX. Let's see if we can look at that one real quick as well. HLX. Helix Energy Solutions and offshore. Okay, I like offshore. I definitely am a fan. 98 relative strength. Wow, that's strong. Definitely, we're definitely looking in the right neighborhoods here. Checklist is good, 78%. I'm really liking that. On the technicals, we're really close. We're 5.35%. So this is potentially a secondary buy point. Let's just see if I want to look at the pattern recognition here and see. Pivot is 719. So we're pretty far. Well, we're not that far. We're 18% above. This is a relatively inexpensive stock. A lot of times when you are buying stocks like this, they're much more volatile, of course, because they're below $10. It just magnifies the volatility, but it looks pretty good. I probably would not be buying this one. I want to see if it can continue to hold above, move up above $10, where the funds would be more interested in that. What are you talking about? Okay, well, I'm talking about stocks. I'm talking about stocks. Do you use order flow? Well, actually, I do, because almost all the brokerages now use order flow. And what order flow is, for those that don't know, is that it's they pay for the orders that are coming in. So companies like Citadel and companies like that, they use order flow. So thank you for that. That's a good question from TikTok. CRM went up after hours. Is it a buy now? Interesting question. Let's take a look at CRM. This is, of course, Salesforce, Mark Benioff's company. And I do not know why it went up after hours. Let's see. Did they just go through? Oh, the earnings. Okay, that makes sense. All right. So it does look as if they just went through earnings. I want to look at the 5-minute chart. Yeah. Okay. So it pulled back right there. So, and it's up in the after hours. Let's take a look. Yeah. Okay. I'm trying to see, get the after hours. Yeah. Wow. Look at that. 193. It went parabolic. Absolutely. So it basically closed up. Wow, all the way up here. So basically, what's going on here is that somebody's coming in here big. Somebody's coming over here big, because in the after hours, it basically went from about all the way up. It gapped up. So we're going to get a gap up on this one tomorrow. Wow, this is in the after hours. I do not know why this one gapped up. They must have had spectacular earnings. I'm going to look to see and see if they've reported that yet. No, they haven't reported earnings yet. I mean, in my software, it has not reported earnings yet. But wow, they must have really, really moved up here, because this is a 56. So somebody big is coming in, and I don't know. I don't know why that is the case. But CRM is interesting in that it is one of the few enterprise software stocks that's in the Dow. So very interesting there as well. All right, let's look at Tesla. Tesla's everybody's favorite. I haven't been trading it all that much. It was down a little bit today, and it seems like that $200 level seems to be kind of, that seems to be a little bit of a floor for it. Here's my take on Tesla, and that is basically, I think that we're going to see, I definitely want to see it close above that 200-day moving average, but it does look like it's sticking right to the 21-day line. So if we drew a line, we're probably going to get, you're probably going to move through the 200-day moving average probably by about March 12th. That's what I'm guessing. But it definitely looks like it's on track there, because it's getting support on the 21-day line. And there we go. So right now, the 21-day line, we're about 4% above it. Not a lot. The question is, could we buy it here? Boy, you know what? It does look like, there's some potential, but I want to see it pull back to that 21-day line. So I probably would pass on buying it here, but very interesting. Of course, always interesting when it comes to when it comes to Tesla. Here's what I would do with Tesla. If it pulls back to about 194, that's where I'd be looking to buy it. Right about the 21-day line. I think that would be an excellent place to do that. All right. Hey, Charles, the option course, is this just for beginners? No. This is a relatively advanced course, Charles. It's a great course. I just want to put it up there. Gavin McMaster is, he's really, this isn't just a canned course that you look at. This is an actual, this is an interactive course with the instructor. And Gavin is in Melbourne, Australia, but he conducts this course, and he does it. I think it's once or twice a year. It's definitely worth it. I've gone through it. I learned a ton off of this. If you want to be trading options, this is definitely something that you might want to look into, because it is a special deal. You have to go to this address. I'm going to put up more information on this, but it's https://stan.store, and then just Dallas Trading Floor, and then you should be able to jump on over there to it. But stan.store/Dallas Trading Floor. I put it in the comments. It's the first one in the comments. So definitely something that you might want to look at it, because I do think it is a great course. He will go into a lot of detail, and he's a very successful options trader. So especially in this market where it's a tough market to trade, we're not really we're kind of going sideways, options can be excellent. And I'm going to cover, if the market continues to move like this, I'm going to be covering more options plays because, that's how we deal, when it gets like that. All right. Question on Shopify for Jeff. Of course, this is one of my favorite stocks. I've been, I have traded this one. I'm not in it currently, but I'm looking for another opportunity because I do like the stock a lot, and I do like the stock a lot. Now it's pulled below the 50-day line. I want to see it trend higher before I jump back into it, but that's the reversal line right there. And as we can see, if it moves above that reversal line, what I'm going to do here is just put an alert out there because I think this is worth doing. What I'm doing here, by the way, everybody, is that when a stock comes back and does a handle like this, we want to create this line. And what this line is all about is it is a reversal line. And so currently the stock the price is in a downward trend, but if it gets support here, and it does look like it's getting support, then it will move higher and usually rapidly. So that's kind of what we're looking for. Right now, it's, today it was pulling back, but if we get some support right here at about 40, that's where I think the support is right about there at 40. That's where we could see it move up. Now, looking at this is, by the way, I'm looking at the 5-minute chart here. We can see that increasing volume. So that's what you want to see. You want to see it come down to that floor, increasing volume, and that means that it's very likely to the supply is once people aren't willing to sell, that's what will push it up. So if we go back to the daily chart, you can see with Shopify, 40 seems to be the floor. And by the way, if you're a student of Jesse Livermore, and I highly recommend you finding out who Jesse Livermore is. He's one of the greatest stock traders of all time. This was one of his amazing discoveries, was that when something comes down to typically an index line at a round number, and volume starts to increase, that's where we can have a potential. We can have a potential for it to change direction very, very rapidly. So I'm not necessarily saying that it's going to be right at the 40 line, but I was day trading this. I'm out of it, but I'm kind of waiting for it to reverse. If it reverses, I'll be back into Shopify. I think it's a great stock, and it definitely is looking good. But right now, 40 seems to be the floor on it. And it does have a little bit of a weak checklist, 56. I typically like to buy them better than that, but I'm still very bullish on Shopify. But I want to see it to reverse direction. If it reverses direction, I'll probably be back in to Shopify. All right. Thank you for that. Let's see. Mr. Jeet. CRM beat. Oh, that's okay. That's why. Okay. Makes total sense. Now I understand. Thank you for bringing that up. It does look like, they beat, and with the buyback, I can see why a lot of people who were trapped in that stock, that was why I'm talking about overhead supply buybacks. Right now, a lot of companies are doing buybacks because, quite frankly, the performance of their stock is not indicative of their financial performance. So they're doing the buyback. That's what triggers the buyback, and it does look like this will lower the number of shares out there, and that indeed will push the price higher, because it's kind of been, CRM, Salesforce has been an underperforming stock. So that's very, very interesting. Thank you for sharing that. So appreciate it. Well, everybody, that's probably it for today. Thank you very, very much. By the way, if you can, and I always ask every time, but it really helps a lot, and that is if you can smash that like button, because that gets us out there on the algorithm. I got to figure out how the algorithm works. I certainly don't know, that's for sure. But smash the like button on Dallas Trading Floor. So smash the like button, hit that like button hard, and it gets us out there to a lot of people. I'll be back tomorrow at 5 o'clock Central Time. Thanks, everybody. And by the way, this options course is a great deal. If you're into options, this is the one you kind of want to you kind of want to take a look at. I've taken this course; it's excellent. It's a special deal just for people that watch this show. Normally, it's a pretty expensive course, but we have a special deal, and it's the Options Mastery course, and it starts basically at the end of the month. March 31st is when it starts, but for this month, if you go to this, if you go to this address, you can get a special deal on it. So it's definitely worth it. An options mastery course from Gavin McMaster, and I'll have more. I'll hopefully have a little piece on this one that to kind of give you give you a preview of it. But I think it's really worth it. All right. Well, thank you again to everybody, and I will be back tomorrow, of course, at 5 o'clock. Thanks a lot, and we are out of here. So. Happy trading, everybody, and stay safe. Right now, the market is still it's not in a confirmed uptrend, so be very careful with your buys right now. I am less than 20% in the market. I'm mostly in cash still, waiting for opportunities, and that's kind of what we got to do. We got to build the watch list and get ready because I think there's going to be other opportunities, but right now we're just kind of going sideways. Tough market to trade. Don't be victim of 1,000 cuts. So stay conservative, smaller positions, lots of cash, and we'll see you tomorrow.